key stage. Look at this place. This is the coolest stage I've been at by far.
It's important to be different. In a space like this, if you're different, you win, right? So it's great that you have that working in your favor. It's great you're capturing this, you can show it to the people, so next year you can have more people coming.
Our next speaker is Ashton Addison. He is the founder of the Crypto Coin Show on YouTube. He has interviewed over 1,000 people, and they are predominantly CEOs. He also gives regular market updates at the Tulum Crypto Club and is very, very, very knowledgeable about crypto. So we are very excited to have him come and give us a market update on what is going on with crypto right now. So very excited to have you, Ashton. Thank you.
Awesome. Thank you so much, Naz. Yes, what is going on in the market? You know, everyone's hearing about Luna and UST, and then we crash the market, but none of the talks are about it, you know? So I'm going to reveal a few secrets, but of course, there's so much more to crypto than just that. So I'm going to talk also about Bitcoin, Ethereum, the other projects that I think could be the next unicorns. So yeah, for those who haven't seen my YouTube channel, it's called Crypto Coin Show. Put out an interview every single day with a new founder. Most of them are just at the seed stage or just startups that are already normally well-backed by VCs or good crypto projects that could potentially be future unicorns. So if that's your investing style, definitely take a look at Crypto Coin Show on YouTube. Now, I want to talk a little bit about the market crash that happened this week. What does it mean? You know, why did it happen? Let's start with Luna. You know, personally, I, as a smart investor, have a well-diversified portfolio. I did have Luna in my portfolio, and last week it was $100 per coin, dropped 100% to zero. The market cap of Luna was like $48 billion for Luna and the stablecoin UST together. And to put that in perspective, it's about the same size as Lehman Brothers was in 2008. So this is a catastrophically sized crash. Yet, the stock market in 2008 compared to what it is now, because of the inflation in America and so much going on with the stock market, it is 10 times bigger than it was in 2008. And like we're on just this trajectory that it is a very risky time in the market, in the stock market and crypto market as well. And that's why it's good to always have a strategy and have reasons for the investments that you make, and just be choosy about what investments you're making, right? And we're clearly not in a bull market right now, and that means that meme coins and gambling are not just easy wins as they were last year, right? And a lot of people that are just getting into crypto, some people get in through meme coins, and but then they realize that in a market like this, it doesn't really work like that, and things just don't go up for no reason. There needs to be a fundamental reason that a company will stay strong throughout a bear market and a bull market. So Luna dropped to zero. It also has a stable coin called UST, and the way that it worked in the back end was that essentially Luna they were backing the stablecoin with Bitcoin that they were using. Luna, they were able to mint more Luna whenever they wanted, and then they were buying Bitcoin with that Luna, and then saying, okay, the stablecoin is backed by Bitcoin that we just bought with the Luna that we just minted out of thin air, right? And eventually, the dominoes fall, and there were a few red flags but no one could have expected that when it would fall. And for that reason, I actually never personally owned UST, the stablecoin. but I did own Luna as a part of a well-diversified portfolio. And I know people that had millions of dollars in Luna, and that was like their main, 80 to 100% of their portfolio was like Luna, right? And that's not a smart strategy if you're a smart investor. You have to have a diversified portfolio, right? And for that, the Luna that I had, I could afford to lose it, and it was a small percentage of my portfolio. And although it really brought down the market in a cascading effect, I'm not stricken by losing the Luna because I was diversified. Now, I want to talk a little bit more about the stable coins. And in a bear market, a lot of people, there's multiple strategies on how you can make it to the next market, right? Do you try to time selling your Bitcoin and Ethereum into stable coins and then try to buy the bottom? Or do you just sell a little bit? Or do you just keep buying Bitcoin dollar cost averaging over and over again? With UST, the stable coin, if you've looked at DeFi and CeFi, centralized finance, you can see that you can stake your Bitcoin and Ethereum. You can get like 6%. And with stable coins, you can get up to 10%, right, per year, compared to the bank at like 0.1. And you're like, wow, 10%. Maybe I should be staking my stable coins, right? Well, UST was giving 20%. It was the only coin that was giving 20% as a stable coin instead of 10. And you got to think, why was it giving 20%? Why, right? And even though it was double the percentage, I never ever owned UST because I thought that's odd. And the way that it works in DeFi is often the liquidity on the exchanges is no longer done by market makers, in Binance and FTX and up-and-coming exchanges. They're like trading on both sides trying to make the market, right? It's done by people depositing their coins. Like a lot of the main trading pairs would be like Bitcoin and USDT or Bitcoin and UST as it got bigger. And that's what actually builds the liquidity on the decentralized exchanges. So a lot of people as UST got bigger, it was used as a lot of liquidity pairs on the decentralized exchanges. So people would buy UST and they would buy Ether and they would stake it into the liquidity pool and be earning a percentage, right? But with those kinds of liquidity provisions, there's something called impermanent loss, right? And that's another thing that you really need to look into if you're going to be staking more than just in CeFi where you're staking one coin. If you're staking two coins, then there's impermanent loss and you can lose a lot of your money, especially if one of the coins crashes, right? And they said it's safer to stake a stable coin with one coin because then you only have volatility on one side normally. But the APYs are higher if you're staking Ether with another volatile coin, but you also have that risk. So as UST got bigger, it was used in different blockchains as well. And if you've seen with USDT being one of the main stablecoins, it is now on all of the blockchains, right? It used to be just on Ethereum, but then the Ethereum fees were getting too high, so they're like, oh, we can just put USDT on Binance chain and on Solana and on Bitcoin, and the same went for UST. It got so big that they're like, oh, we can put it on Avalanche chain, we can put it on Ethereum, and then we can build trading pairs for that as well. And so when UST crashed, that really sort of cascaded and brought down all of the other coins in the market. Now, the question is, if this is a bear market and your strategy is to sell into stable coins to try to preserve your wealth, what is the best stable coin? Hopefully you didn't have all of your money in UST. Do you put your money into USDT, Tether, or do you put your money into USDC, the Circle, or do you put it into DAI, MakerDAO? What is the best stablecoin, right? And there's different classifications of stablecoins in the way that they're backed. How are they backed? What is these really important notes, not just for stablecoins, but for Bitcoin, Ethereum, and any coin that you're buying as well, is how are they backed? What is the supply? What is the inflation rate or the circulating supply, and is it able to be minted, right? With Luna, there used to be about 180 million Luna in circulation, but as the UST was crashing, they were printing more Luna to try and sell that off to make UST become stable. And the supply of Luna went from 180 million to now 6 trillion. So there is no chance that Luna is going to go back to $100 per coin unless the market cap is going to be $600 trillion, which I highly doubt. And there's people asking, everyone has heard about Luna. Should we buy it now? Maybe it's going to go back up. Well, now it is not an investment. It is gambling. If you look at CoinMarketCap, it's actually the highest gain today because all of the gamblers are gambling on it, and it is up 900% from the bottom, which is 0.000000001, now to 0.0001 with 3 less zeros, but still almost nothing. And unless you could time the exact bottom and you're degenerately gambling, I would not try to go into Luna. Now, Luna is what's considered an algorithmic stablecoin, which essentially means it's backed by nothing except an algorithm where Luna gets printed to try and back UST. USD Tether and USDC are called fiat-backed stablecoins. Now, again, what does that mean, right? There was actually a depegging with all of the fear in the market. There was a depegging of Tether. It went from $1 to like 95 cents, right? And people were getting scared, like, oh no, is Tether going to do what UST did? Is it going to drop to 50 cents, 20 cents? And it actually did go back up, but right now, the way that Tether works is it was actually created by Bitfinex, the exchange, and they have deep, deep ties into crypto and into shady things in crypto as well. Let's keep that in mind. But before Bitcoin was huge, USDT Tether was like the only stable coin. I remember when Bitcoin was $1,000. And I first got into Bitcoin at like $200. It got to $1,000, and I was like, "There's no way Bitcoin's gonna be worth more than $1,000. I'm gonna sell it into Tether, and then when Bitcoin goes back down, I'll like buy it back." Well, when Bitcoin got to 1,100, I changed my mind. But Tether was around since then, and it's still around. But it just because, and the market cap is like $50 billion as well. So does that mean that there's $50 billion worth of cash that's actually backing one for one each dollar in Tether? No, that does not mean that. And does that mean that it could crash? Potentially. And I'll tell you, USDC is not backed one for one as well, but they both have positives and negatives, right? And myself personally, I still use Tether and I use USDC interchangeably as I would in a diversified portfolio. Use it really just to buy dips and, to hold it instead of holding US dollar itself. I use both, and if one of them crashes, I'm diversified, so you don't have to worry about it in the same way that Luna did crash. But USDT is actually 60% backed by collateralized debt positions of companies that are in the stock market, in the same way that a lot of companies are just backed by, essentially not actually backed by cash. So less than 5% of USD Tether's $60 billion market cap is actual USD. So in the case of a stock market crash, similar to 2008, it's already actually happening. If you've seen, almost 30% of global wealth has been lost this year from the stock market. If you've only been focused on crypto and not on the stock market, Netflix is down like 70%. Most of the FANG stocks in the top 5 are down. It's their worst year since 2008 so far. And we're really teetering on the edge of a collapse, right? And if the largest companies in the world that are in the US stock market become bankrupt, those collateralized debt positions that are on Tether could also cascade into breaking into nothing. So keep that in mind. With USDC as well, it's actually 40% backed by cash and also still backed by those collateralized debt positions of the other companies. But it's also backed by Circle, which just had a huge investment from BlackRock and some of the largest companies in the world that control the world. So it's your choice on what you want to use. Now, in terms of Bitcoin, are we at the bottom? We're getting pretty close to that. I would definitely not just base your sentiment off of Twitter and what retail investors are saying. Look at the on-chain analytics. Look for yourself. Understand the circulating supply of Bitcoin. 21 million ever. Bitcoin minted every 10 minutes cannot be changed. You know that it cannot be printed like Luna. Check out Ethereum as well for the circulating supply. With this move into proof of stake, the amount of supply is going to drastically go down, and it should make it more deflationary. And it's good to understand if it can be printed or not, because if it can be printed like Luna, you can easily lose all your money. And with Bitcoin, I was just looking at the on-chain analytics. It might not be the lowest low, that happened last week. And normally as the market cycles, there's a capitulation phase where, Bitcoin's in the news, it crashes, everyone hears about it, they start buying it right away. But then there's that time when it's just sort of going sideways and everyone sort of forgets. And it's like, oh, Bitcoin's boring right now. That's when the companies that are smart are buying it up. And that's going to happen in the next few months. And it might be a slower recovery than we think. But all of these companies are continuing to buy Bitcoin and Ethereum. And it is one that has stood the test of time for the last 10 years, and I think it'll stand the test of time for the next 100 years. That's all I have for the market update.
Thank you.